Right. Good morning, everyone.
Morning.
Welcome back, guys. I know last week we didn't do one, but we'll get right back into it today. As always, we'll start with a brief forward market outlook. We'll go over some top ideas. We'll go over some lessons learned from the weeks prior, some winners, member ideas, as we do every week. So getting started, some of the stronger sectors in healthcare still doing very nice up here, kind of flagging out. We can see with most of these major sectors, we continue to see these bases forming. Again, I hadn't really looked at the market the entire week that I was away, but coming back, I say I went through a lot of charts, a lot of sectors, and everything looks for the most part holding up pretty well. That we should expect to still see some decent action going forward. Again, in healthcare, we can see this little flag forming, and eventually we'll see this break through this 245 as it works its way back up into this 270 area. So healthcare has definitely been very strong. Utilities, again, same thing. We saw that strong snapback. We're seeing these like little kind of flags forming inside of these bases, and eventually that breakout up back up to those those prior highs. The biotechs and telecom, as we've known for the past year, have been the worst sectors. We can see this red horizontal line, this very clear and obvious breakdown stage, is now starting to finally leave that breakdown stage and is moving into a much bigger base. We see the double bottom down here at like 106. So we can see the biotechs that were in second to last place are starting to show us that maybe they are ready in time in the next 6 months to a year to kind of work themselves back towards their prior highs. And lastly, the consumer staple sector as well, kind of snap back off these lows, and we can see this little kind of flag forming. It's still probably too soon for the consumer staples to really kind of push through with like a lot of momentum compared to like healthcare that has had a couple attempts already. But just some of the stronger sectors, virtually all the rest of the sectors are again in that same starting to form that base. We see that in the Dow 30, we see that in the mid cap space, we see that the industrials, which still look a little weak overall. NASDAQ, we see again that same base forming. Discretionaries, same thing. S&P, same thing. For right now, we have that 360 pivot in the SPY for now. Definitely can still test that. That's not like a hard out. Probably we're going to retest that at some point, and if not, even shake it lower. Very rarely is that going to be like the perfect low when it wasn't this dramatic. We look at a lot of the lows that get put in, it's often like a very dramatic bar. It's not this like very little kind of doji bar. So, we can still push up through 395, but I wouldn't be shocked if we at some point this summer retest 360, push a little bit lower, and before we really find our footing. I still feel that by the end of the year into 2023, we'll be back at highs at some point. But in the meantime, again, a lot of just basing, a lot of setting up, and just this is the time where you can't really be buying the third and fourth day up. You kind of have to be letting it pull in 3-4 days and looking to buy back up. Like this type of day is like that perfect example. If it pulls back in and you're buying on the way back up, like those little support buybacks. And again, same thing with the rest of these sectors. Tech, same thing, basing, small caps basing, and telecom, which has been the biggest loser this year, little base starting to form here. So we can see overall a lot of these sectors, major markets, we've seen this obvious breakdown. We've seen mostly from most of all these sectors, some type of base or some type of little flag forming. All good signs to see. And the biggest thing on my end is seeing that the 10-year, which again, as the Fed trying to continue to raise rates, we're not really seeing any dramatic run-ups or continuation with the 10-year. We're seeing it had that parabolic runoff, it's starting to fade, and it looks almost exactly as how energy looked when it had its last run-up. Same percentage move, energy was up more than 100% this year. The 10-year has been up more than 100%. And you can see chart-wise, they look like, brother and sister. And this is obviously when everyone and their mother loved energy outside of our group, when we were starting to exit that trade. And it obviously has gotten, pretty banged up since. And it just seems very similar here where, when the 10-year was at 3.5, it's going to 5%, it's going to 6%, which is just not realistic in the short term. And now it starts to fade it. And then if we see it roll over down through 2.7, it probably continues to follow suit with what energy has done. And that will benefit the equity markets as interest rates get more affordable. The only major sector to avoid again, is the material sector. We saw it break. It's very clear. It was a flag. Now it's a topping pattern. We saw it break. It's just a big avoid until in the short term, until it makes the measured move of this breakdown. So any material stocks would highly avoid. Couple top ideas. This UPS name that I've been in for quite some time, starting to base here up to this 190. Earnings are kind of around the corner. So, no big rush on that, but one to keep on the radar. Gilead's another one that we haven't really watched since we took that trade through 68 earlier in 2021, but it's kind of setting back up here. We can see this little flag forming, and there's just a lot of area up here for this thing to kind of push back up through and kind of get back into the 70s when it wants to push to the 64 area. NBIX was a name, I'm not sure if it was Heaven's name or Shakes, but this is one that we've talked about a couple times. See this big base forming here. You see the $100 kind of psychological level, very defined level here, and it continues to just get tighter and tighter. The buyers continue to step up. We see these higher pivot lows. All great signs. Still, 10% range. So it's not need to rush into this, but looks very good chart wise. BMY again, healthcare has been very strong. Another one I have the names from a few weeks ago, still flagging nicely, up to that 78 in time. And lastly, is keep an eye on this Amazon down here. I know it's split, which I typically try to avoid the splits, but hasn't gotten too smoked. And eventually in time, if there's 118, really this 130 is going to be the bigger area. This thing got really smoked. So that's going to be probably the much bigger battleground for this name, but there's more of like an M1 name for me anyways, but I'm just buying it every week, no matter what. So winners from 2 weeks ago, we had this Go. I think this might have been Cush's idea, and this UTHR, both still look phenomenal. So with that, Heaven, if there's any member ideas you want to go over, we can do that, and then we can finish up with some of these other member ideas.
Yeah, I got a couple of my own. Seems like a lot of members kind of have some overlapping ideas, so we'll try to get through some of them here. ABDV, I mean, I've mentioned this one probably like 2 weeks ago, still watching it, just kind of been going sideways. Had a really nice shakeout Thursday, opened kind of below that support level and just really quickly got bought back up. So that's always good to see. Tells me buyers are awake. It does have earnings in about 10 or 11 days. So still has some room for a pre-earnings run, but definitely something to note that near the end of this month, they are reporting. This Duolingo still on my list. I'm liking it more and more as it just continues to base. Yeah, you're seeing those higher pivot lows just continue to follow. Really, really like this one. I don't know the exact price I'd be buying, but I mean, around this 100 looks pretty solid, but clearly needs to clear that 110 to really get moving. But this is more of a long-term trade. I'm not trying to be perfect on this one. This one would probably require me to buy it a couple times and just build a position into it. We'll just go on to some member ideas here because a lot of them are looking at the same things I am. Tommy is looking at ARGX through 368. So, and if you actually zoom out a little bit more, you'll see that it actually tested this 380 a little while back, about a year ago, maybe a little bit more. Had a nice pullback and then just kind of looking for that push back up for that third attempt through all-time highs. Looks pretty solid to me through that 380 in time. Trying to sneak in here through this 368. Looks like it's gapping up above that today, but overall, pretty solid setup there.
Yeah, that 380, I'm going to sit away for this. This is like, again, we've been talking about healthcare and pharmaceutical names. Healthcare being very strong, biotech, pharma names starting to come back into play, and biotechs have been a little bit weak broadly, and this name is already at high. So when that sector does really kind of catch a bid, this should be one of the first ones to kind of push the average 380, but it's still this, this is top right, everything we want to really see, just more development under that 380 and
Yeah, the tough one with that one, just buying it at 368, is you really have to give it to that pivot low if you want to stay in it, because there is a likelihood of it sort of just chopping around. So you do have to give it $20, which it's still, not massive for a $300 name, but I would keep that in mind. Maybe start small and then look to actually buy through that 380 when it sets up with a nice tight game plan. Next one, these guys MCK through 335.50. A lot of people have this one on watch. It's also on my list as well. I have some people actually looking to buy it through 331, and then I have some through 335. Personally, I think 340 is kind of the level. Sort of been chopping around here. So when I see it chopping around in this range, I don't really want to be buying in the chop range. I want to be buying when it breaks out of it. So, again, through 340, I think in time, got earnings coming up too. So that might be the catalyst to kind of push it over. But it looks really solid overall.
Okay.
Reynaldo, he's looking at MNST. That's MNST through all-time highs.
So this is actually like the best performing stock in like the history of like the stock market.
Yeah, Monster Beverage. Who would have thought?
Yeah, I never would have thought in a million years, but this looks amazing. Charles.
Yeah, it does. It definitely looks amazing. I would say, versus that 95 pivot looks really good. You're risking $5 on the trade through that psychological 100. I mean, there's a lot of layers of probability. Ideally, I would like to see some more sideways just from the massive run up it's made from those like 72 lows. Big run over the last few months. So, I mean, if it kind of just consolidate here for a couple weeks, it would really make it an A+ setup, in my opinion. Yeah, the weekly chart really shows how extended it is, but looks really good. Eric is looking at VRTX through 295. Another really nice looking chart.
Through, is it what, 295? Yeah, to the side, yeah.
Yeah, 295. Looks like it's gapping right to that level right now. But this looks great. I like this little flag here at highs. Obviously a macro level dating back to 2020. So, and it's third attempt up here.
295, 300.
Mm-hmm.
Yeah, and all these charts are and everything we want to look for. Everything that's been mentioned so far. Top right, near major all-time highs. Path of these resistance is much higher. It's so much easier to focus on these setups. And these all look phenomenal. It's like a month ago when the market was doing this, everything looked horrible. A month later, things are kind of tightening up and everything looks much different now. So this looks great.
Yeah, good. Next one, Eric's looking at SGen, SGEN, through 180. So nice little momentum flag here, definitely. Earnings coming up in like 10 days. Surprisingly gapping down today on a big gap up day, which is kind of a red flag to me, but we'll see if it can just recover quickly today and see if the buyers are still awake there. If you zoom out, it's a pretty solid level on like sort of this descending trend line. So, it's tested this trend line several times, except this time it's really consolidating at that level, which makes it very different from the other attempts. So that's what makes it nicer. You have a lot less risk here. If it fails, you know where to get out, versus these other ones, it was a lot tougher. So that's a solid setup. Wynn has a nice list of names. We'll go with his top three for now. And if we have time, we'll go over the other ones. He's looking at BJ through 71. I would say this one probably needs some consolidation. What do you think, Ben?
Yeah, I mean, again, top right looks great. But yeah, it's just very extended.
Yeah, I'd like to see kind of what SGen did, where it sort of flags out at that major level. Yeah. Right now, it's kind of going straight up into it, and like even if it might work, there's a high probability of it just kind of going sideways and chopping you up. So you might as well just be patient, wait for that lower risk opportunity. Next one, he's got LRN through 42.
So this is like the first week on my end from some of these ideas where it's like I'm gonna go put orders in this Monster, this SGen, like those are like trades that I'll take with the members who call them the MCK, AbbVie. Like these are all like tight risk trades that some of them are gonna have to work. Where like 2-3 weeks ago it was like I'm good. These are nothing's really developing yet. Where there's a lot of good setups being kind of called out to this LRN. Definitely like it way more than this BJ. Again, BJ in time is going to be a great trade through that, but I just, like we said, there's no pivot you can really give it the proper room. Where this LRN, you can buy that 42 or 42.5 area and give it versus, 40 or 39 or 38, depending on how much you really like it. it's a little bit more defined of an area than that VJ where it's just too extended in the short term, where this graded sideways for a bit.
Yeah, next one he's looking at is McDonald's MCD through 256.
So there was no McDonald's in Italy. I saw like 5.
No McDonald's, huh?
Drove the whole country and I saw there's no fast food there. I was shocked. I saw one Burger King and
Wow.
maybe 5 Mickey D's, and I drove from basically 1,000 miles when I was there.
Wow.
Fast food.
Yeah, it's 256. I mean, Friday kind of tells me, gives me a failed breakout sort of look, since it kind of closed below that resistance level. Might need a little bit more time. And yeah, you kind of just mapped out that level. Looks like 257, 258 is really the spot. But overall, I mean, solid chart. You know, McDonald's, I don't think it's going anywhere. So
a lot of the Dow 30 names, I was looking at them yesterday, and there was a lot that looked more of like spots you have to give them, not like quick kind of swing trades. Really not McDonald's in this relevant example, but there was like names like Goldman that had been beaten up. You know, Disney that's been, you know, pretty beaten up. Again, Disney's not going anywhere. You're not going to, you know, Disney Plus is not going anywhere. The theme parks aren't going anywhere. You know, and this is if you have the year or two, you know, 100 back to 200, it's 100% move. So there's some of these Dow 30 big names that have gotten pretty banged up that you can kind of, you know, if you do like them a lot, these are the times like Nike, you know, if you know, someone like Mo who's buying Jordans every other week, this is a name where like you'll have that conviction that, again, if you give yourself that year, it's real, you know, it's not a long shot to expect for this thing to kind of work its way back to highs and 100 back to 200. You know, it's a decent, and it's in safer names, not like a random biotech that can get destroyed overnight and it's done. It's like people are not going to not buy sneakers anymore.
Right.
So that McDonald's.
Alex has a couple on his list as well. First one, he's looking at AMCR through 12.
Fuck that. We went over. So, again, recent IPO is a little bit different. If this was a $33 stock or a $55 stock, all for it. But just to go back to that lesson learned from 2 weeks ago, and I forget who it was, but the same cheap stock lesson. Remember, want to buy 12, goes to 10, you lose 10%, 20%, it's right back at the price, nothing has changed. Yeah, you know, this HRT, same thing, buy 16, stop 14, you lose 10% again. Plan B, buy 20, gets up to 18, lose 10% again. And these are all these like kind of same teenager stocks, cheap stocks that it's just not worth. It's just wait till that stock gets to 30 and then, and you'll buy it at 30 and you'll have that realistic chance of selling it at 60 within 36 months. What was the name of this one again?
This was AMCR.
AMCR. This thing, I'm going to add it back to this lesson learned part, and we'll keep an eye on it, but we'll see. So let's see. What was the price you want to buy?
12, which I mean, it's at 12.50 now. So
all right. So we'll still give him that he can go back in time and buy it at 12. Which no, so okay, we're gonna say you can buy it here, and we'll just keep an eye on it over the next couple of weeks. But these cheap names, just just avoid them at all costs. No big mutual funds. They're not looking at these like cheaper stocks, so you're not going to get that follow through. It's just they take so much time. Even this thing moved. You know, if you traded this thing absolutely perfectly this year, you bought 11 and you sold 13. You made what, 20%?
Yeah.
You held the name for February, March, April, May, June, July. So you held the name for like 6 months to make 20% to be absolutely perfect. And when the stock is here and it looks amazing, you're not thinking sell, you're thinking like it's going to go to 30, and then you end up holding it back anyway. So that's the part where you're like, we're talking about asymmetric risk reward. You don't really have them in these cheaper names. Best case, you're going to get 1-to-1, 2-to-1. If you're really, really good, 3-to-1. Realistically, like buying 11 versus 10, selling at 13. You're risking $1 to make 2. Where I would rather buy Nike and buy it at 100 versus buy it at 105 versus 100 and risk 2%, and realistically be in the chance to make 5%, 10%, or if it really works and that low holds, I could potentially make 50 or 60% if it works way back up. And that's like not unrealistic. We're in that this AMCR, this isn't going to be a $50 stock next year. It's not going to be a $30 stock next year. So it's the person going there, you often think because it's a cheaper share price, I can buy more shares, but it doesn't matter. If it's a 20% move and there's $1,000 invested, it's the same $200. It's not like you're going to make more. You're not going to make more money with 20% in this name as you would with a $200 stock with that same.
Yeah. Yeah. Well, here's another one for you on his list. AZO, looking to buy it through 2220.
Yeah. So
a
this
little bit better price.
this is like exactly what we want to look at. The complete opposite. It's the most expensive name. All the newer traders are not touching this name because they can't afford to. And these are the names that when they do get through these highs, anytime in the past it's gone through those highs, it just drifts higher. So, back 2021 through 1300, it was so expensive. It, can't go higher. It goes nearly 100% higher with ease. This is an easy move. In that same period of time that stock went $2, this name went, from 11 to 13. AutoZone went from 1,300 to 2,200. A dramatic difference in share price, and that's because these names, no one's keeping, like most people aren't, or most newer traders aren't watching these names. So when they do break out, it's much easier for them to just have those run-ups. And we're seeing that same pattern we saw here developing again. Now, granted, this time it definitely developed much longer before that big run-up, or here it's more so kind of the retest. But these are the names you want to keep the eye on. Like I would, all day long be down and buy 2,200 versus 2,100 and risk the 5% to have the opportunity to be involved for the same to drift up to 3,000, like all day long. Yes.
Only thing I don't love about that AZO is the average daily volume, which is like 140K. So it is a little thin, but other than that,
it's just a super expensive share price, and that's why that's a little bit thinner.
Abby's got a few on her list too. First one she's looking at is Meli, MELI, through 700.
Definitely like it. Again, she's had a lot of really good calls lately, and again, she's the only thing that it can get misleading is like if you're buying 700, the out 600. No, that's a decent amount, and I kind of there was a name the other day that I almost was going to add to, and it looks so tight down here. I think it was Etsy. No, CRM actually. Nope, I can't remember. Anyways, like it looks tight, but then when you realize, okay, I'm buying 700 versus 600, it's 10% immediately. So that's what you have to be. If you get that momentum through 700 and have a prior lower day and then a lower day stop to keep it kind of tighter, fall for it. I think initially giving it that 100 points might be too much, because if it does break down to 600, it's definitely going to smoke lower, but definitely looking at.
Next one's AVGO through 495.
So this is like that. We talk about like sneaky buyback. This was 490, what's called 500. This 500 was like the bigger breakout. That this first time around, obviously amazing kind of breakout. And now this like that sneaky one. It's broken back down through it, and now can it set back up for that next run where no one knew this time how high it was going to go, and then now we know, okay, 675 is the high, and now it's can it sneak back through here and work back to here? But it has some things in its way, 650, 600, 550. Like these are going to be the battlegrounds, but you definitely can sneak into these. But for now, it's tough because this was like before, when it's hard to buy third or fourth day up, especially when we're in this more of a range run. We need to be looking when the name can kind of, pull in 2 or 3 days. You can find these spots where you can buy. And you don't have to buy crazy, but like this is kind of like the entry day, like that pulls in, you're buying the next day above that prior higher day. Those are kind of the spots right now when we're in this kind of range that we need to be involved. It's hard. It's going to be very hard. Like if the SPY trades up today, to buy it tomorrow through this 395, that's a very tough buy because you have so much room to give it. So that's just broadly right now kind of where we need to be like planning for these entries, is like letting them pull in for 2-3 days, And that first day back up to the prior day's high is like really where we want to be finding those entries in this range bound market.
Yeah, we got one in the chat right now from Reynaldo. He's looking at Starbucks through 8150.
Again, we're seeing a lot of these bases form. You can see this very obvious and clear kind of breakdown stage in Starbucks. And these lines aren't going to be perfect, but you get the idea of this breakdown. And now we're starting to see this base forming.
One. Yeah.
Change this to green. So we can see this base forming down here. And then we see, and this is the low. We have a higher low, another higher low, another higher low. So we have the buyer stepping up in this base, define, pretty defined level of resistance here. The only tricky part again is we were just talking about, it's like, if it goes today, it's fourth day up again. It's not very extended. It's only, up $4 off that little pivot, but it's hard to, anytime looking at these names, buying fourth, fifth day up, it's hard to get that follow through. If it even tickles to 81 today or 82, it pulls back in. We get another higher low above 76, and then you can buy 80 versus 78. Then it's like,
yeah.
So definitely looks good, but I think this might be one that even if it goes today, it's kind of just like a pass because you don't want to be coming into the trade fourth day up, even though it's a nice base.
Yeah. Sam's looking at FBHS through 64.
FBHS?
Yes.
Okay. So this is, again, tight. Not the biggest fan that we've either had these like kind of bottom right bases, this call, or top right kind of blue sky breakouts.
Yeah.
Both have their place. Again, little base here. That's 60. I don't know if it's at 64, 65. But 65 was definitely this, like where this thing started to break down. That's probably going to be more of the battleground. But I do see that 64 because it's been setting up. And you're getting it for 60. So not crazy amount of room. But you do have earnings on the 27th. So this is one where if it's going to have good earnings, it's going to have a good reaction. I would just wait until after earnings, especially for how beaten down this name has gotten. If they have shitty earnings, things are going to get smoked. It's going to be down in the 50s, and it's going to be a huge avoid. Or it has a decent quarter, and it can, maybe you miss 64 and you miss 65, but it sets back up. And again, you don't have to be perfect down here because this is a big, back to highs is nearly 80%. So there's a lot of real estate that this name can work its way into. Well, you don't want to rush into these when they're not the strongest name at the moment.
Yeah. Low risk, low probability. Those are kind of those bottom right setups. I mean, big downtrend on that one though. I would love to see this kind of go sideways a lot more and really digest that move. Then we got Abby still got a few on her list, so she's got INTU through 395. Seems like a lot of her setups are very similar, where they've just been downtrending a lot and now finally starting to put in some higher pivot lows and giving some tight risk opportunities.
Yeah, I like it. Especially it's like when you find like what you like. So it's like clearly this is like Abby's like kind of bread and butter, and that's when that's where it takes time to figure out the setups that like work best for you.
Right.
And that's when you focus more on those. You can get rid of the clutter. Or I need to be in this. It's like, no, this is what she likes. These work for her. She knows, like, she has a much more confidence in names, and it's, that's what you want to focus on.
Yeah, absolutely. And that only comes with experience. You kind of have to just trade certain setups and then figure out, journal your trades, figure out which ones actually work for you, and then you can just from there you can kind of visually see what setups work best for you. So she's got a ton like that. RH 270.50. I'm assuming it's going to be a similar setup. Yeah, I actually like this one a little bit less just because like I mean, you kind of have to give that one to 200 almost.
Yeah. So I personally love this company. All the furniture in my house is Restoration Hardware, and I'm more of a fan of that company. But I chart wise, again, stock wise, I'm with you as well. I think like this just needs some time to develop a little bit more than this. Like this is almost like too Mickey of a flag. It's like too tight that it's like
you're bound to get shaken out. And then,
it's like you're gonna when you have these really tight flags, that's like the measured move. Like, okay, this is 270 versus 250. okay, it could go to 290.
Yeah, yeah.
It's not a big enough, like a meaty enough flag that it's going to really, like, eyes are watching it type of thing.
Mhm,
Uh,
mhm.
But I'm a big fan of the company, so.
Yeah. There's the other one she's looking at is Target TGT 150.
So
I think this is an avoid in my
yeah, just
250.
from the, no, I'm just drawing like the one that's it.
Oh yeah.
When you have these big gap downs on earnings, it takes, especially in these bigger names, it's like 2 or 3 quarters. Facebook's like a great example of that. This name got smoked in earnings, very big company, multiple quarters. You know, this is earnings, second quarter, there's another third quarter. Name's been dead in the water. So with TGT, these names, when they have these big gap downs on earnings, 3, it's like you almost got to give it like a year. And you don't think that in the moment because it's like, oh, it looks like a great deal. But Facebook, Netflix, another one, got smoked on earnings, got smoked again on earnings. It's based, this is actually the name when I was before. I was like looking at it quickly and then not realizing how big the range actually was. But these are these examples of when these names get smoked on earnings, it takes multiple quarters. This for Netflix will be almost a year. This is the first earnings. Second, you have this third one. You'll probably have another 2 earnings before we're even back in this area anyways. So that's where those bases can be misleading post an earnings gap down. And that's something we just want to avoid for 6 months or a year. Like until this thing's really breaking up through 170, it's not worth your time down here because you're not going to be involved in this bigger part of the move, just like what we're seeing with Facebook. Like, oh, I can buy Facebook 170 back to highs, looks amazing. But this is the part that's going to keep that from occurring, that big gap, where these other names that didn't have these dramatic gaps, it's much easier for them to kind of work their way back up because everyone's not as trapped as the people that got stuck in these earning gap downs.
Mm-hmm.
That, unfortunately, this TGT, I would avoid it until above 170 or the next earnings report. And if it can work its way back up through that area.
Yeah, yeah. Well, 9:32, market's open. We have a few on the list. Maybe we'll cover them later today or tomorrow, and we'll go from there.
All right, man. All right, thank you guys. Talk to you guys next week.
Thanks, guys. See you.